Well, the local unit has been knocked by a cocktail of negatives this month, taking it at one point to an 8-month low above 15 against the dollar. But it has been making somewhat of a comeback as emerging market currencies take comfort in the prospect of lower interest rates in the US and the Eurozone. Joining me in studio now to interrogate the movement we've been seeing and how local dynamic is being factored into the entire equation is Lukman Otunuga from FXTM. Thanks so much, Lukman, for joining us
Thank you for having me here
this
today.
evening. So we've got all eyes on US-China trade talks set to kick off at the G20 summit this week, and markets very much on tenterhook, as I said at the top of the show, ahead of it all. Not too optimistic that the two economic superpowers are going to be able to reach any deal. Where are your confidence levels sitting right now?
Yeah, there's a lot of anticipation mounting ahead of the G20 meeting, and as we've seen in many times in the past, most people are optimistic, but how many times have we seen where there's a lot of optimism over trade talks only for things to fall apart in the end? Personally, I feel that we may have a situation where the United States and China may restart trade talks, because this would give space for central banks across the world to come to the rescue to counter a global slowdown.
Absolutely. It's already what we've been seeing start to happen. How much of the outcome of this meeting do you see being reflected in the Rand's valuation and overall sentiment towards the South African economy?
I mean, looking at the Rand's valuation, the Rand was quite flat today, and year to date, the Rand has actually been given a fresh slate. Year to date against the dollar, the Rand is trading around 0.08%. I don't think it's really been fully priced in as of yet, but it depends on the outcome. Knowing how South Africa has an intimate relationship with China, and it's an open economy, naturally the outcome will play a big part in where the Rand trades in 2019. Should we have a situation where talks end on a positive note, this could be a welcome development for the South African Rand and many other emerging market currencies.
Absolutely. Within that context, we've got an economic data print that's key this week, and that the trade surplus number, well, if we look to see a surplus, that is the trade number, because the trade balance still in a deficit, will suggest that South Africa has in fact been hit by a weakening demand for its exports. What are your expectations as far as that's concerned?
It's quite significant, because if we do have a situation where South Africa remains in a trade deficit, it does show how the impacts of trade tensions are actually impacting demand for South African products. Now, given how, as I said earlier, South Africa is an open economy and 30% of GDP is from exports, naturally this will be very important for South Africa. Should we see a trade surplus, this will be positive for the local currency.
Absolutely. Of course, all of this pertinent as indicators as to where this economy is headed. There's been rising speculation evolving around the SARB following suit with its global peers and cutting interest rates as well in a bid to fuel some momentum. Do you see a move like that warranted in your books? Because many questioning at this stage of the game how much pressure an interest rate cut would actually alleviate.
We've already had a slight taster of where the South African economy is, given the GDP figure we saw at the first quarter of 2019. If you compare South Africa to a 100-meter racer against other emerging market currencies, the economy is actually tripped off. But it's a marathon, not a race. I feel that the South African Central Bank may be waiting for the Federal Reserve to take action before moving forward to cutting interest rates in an effort to keep the wheels rolling on the South African economy.
Do you think markets are getting slightly ahead of themselves in terms of that expectation and the pace of rate cuts we could be seeing, just how aggressive a downward trend in that dot plot we should be anticipating?
Yes, this is a classical example of markets getting just slightly ahead of themselves. Markets are seeing 3 rate cuts in 2019. Things could easily change very quickly if we have a situation where economic data from the United States starts to stabilize in July, trade tensions ease. The Fed may be offered the reason to hold back on cutting rates, and this could be catastrophical for global equity markets.
Absolutely. And for emerging market currencies that have managed to, leverage off some of that expectation in the run-up, do you think what we're seeing right now enough to placate Moody's as far as its stance on South Africa's credit rating is concerned? Because it comes in a context of President Cyril Ramaphosa's latest pledge to offer support to Eskom. And yes, that good news for Eskom and perhaps the economy in the long run. But investors are, actually balking at the prospect at this stage of increased sovereign bond issuances in order to pay for that bailout.
We saw a few days back that Moody did express some optimism over the South African economy. But as we were saying before, when we're looking at South Africa naturally, domestically, if we do see signs of stability in the manufacturing, in mining, this will be a welcome development. But the outlook for the South Africa will be heavily dependent on trade tensions. Now, if we do have a situation where Moody downgrade, if you compare South Africa to a boxer in a final round, that could be the knockout blow for the economy, and this is not the best interest for South Africa.
Absolutely not. Let's leave it there. Thanks so much, Lukman, for having joined us in studio this evening. Of course, Lukman Otunuga is with FXTM.